Today we'll look at the fundamental EPS earnings per share ratio and answer questions. What is EPS or earnings per share? Where do I find EPS when analyzing a company? How do I know if the EPS is high enough? What does it mean when a company steadily increases EPS? What other areas can you use EPS in? In the S&P 100 stock analysis playlist, linked here, I often discuss EPS ratios. I'm Jiri and this is the Invest with Jiri channel. If you don't subscribe to it yet, click subscribe and ring the bell to be the first to get my new videos. Let's get to it. What is EPS or earnings per share? This is an important indicator of a company's profitability. It calculates the profit generated for each common share outstanding. If a company's EPS is high, it indicates strong profitability, which is usually viewed favorably by investors. Higher earnings per share can result effective cost management, rising revenues, or both. It basically tells us how well the company is converting its revenue into profit. The formula is the difference between net income and preferred dividends divided by the average number of outstanding common shares. EPS allows investors to assess and compare the profitability of different companies within the same industry or sector. This becomes especially valuable when considering multiple investment opportunities. By comparing the EPS of different companies, you can gain insight into which one might be more promising. Where do I find EPS when analyzing a company? The ideal place is finance.yahoo.com, which also has other financial indicators of the company. On the company detail, we can find EPS in the second column here. For Pfizer, the EPS is now $3.76. You can use Google Spreadsheet to view EPS. As you can see in Spreadsheet, I have automatically generated EPS values in the EPS column. It is a simple spreadsheet function where you type equals in the cell and then type Google Finance brackets, the company ticker in parentheses, a comma, and then type EPS between the other parentheses. Once you hit enter, you will see the value automatically recalculated. I have the EPS for Pfizer displayed here. How do I know if the EPS is high enough? EPS value alone doesn't tell us much. We need to put it in the context of other companies in the same sector. This will give us an idea if the company's EPS is high or low. In this figure, we see several companies for each sector. I have selected 3 well-known companies. Their EPS differ significantly. Johnson & Johnson is dominant in healthcare, Microsoft is dominant in technology, and Chevron Corporation manages to generate high earnings per share in energy sector. Higher EPS compared to its competitors indicates that the company is better at converting its sales into profits, a factor that helps investors make investment decisions. We need to further examine the EPS value of the company and look at its historical development. This way we will be clearer if it is a long-term EPS value or just a quarterly fluctuation. What does it mean when a company steadily increases EPS? If a company consistently increases its earnings per share over time, it means that its profitability is increasing, which is generally a positive signal for investors. This growth may be due to factors such as expanding market share, or launching successful new products, or improving operational efficiency. Example comparison of historical EPS trends for Tesla and General Motors. For a long time, Tesla has experienced low and even negative earnings per share. However, in the last few quarters, it has seen a dramatic increase in EPS. On the other hand, the fluctuating nature of EPS value can be observed in the established automaker General Motors, which has been moving in waves and even reached negative values around 2018. What does it mean when EPS is in negative numbers? Chinese electric car maker NIO has an EPS in negative numbers. It means that it reported a loss per share instead of a profit for the period. This could be due to the economic recession, the growth and development investments that startups often make, or a one-time event such as a legal dispute or acquisition. What calculations is the EPS used for? Price to earnings PE ratio, which measures how much investors are willing to pay for each dollar of a company's earnings. The formula is PE ratio equals price per share divided EPS. Price to earnings to growth PEG ratio. It's a valuation metric for determining the relative trade-off between the price of a stock, the earnings generated per share, and the company's expected growth. The formula is P/E ratio divided expected EPS growth. Dividend Payout Ratio measures how much of a company's earnings are paid out in dividends. The formula is dividend payout divided EPS times 100. Earnings yield measures the ratio between earnings and the value of market capitalization. The formula is EPS divided share price times 100. What other areas can you use EPS in? During earnings, when a company meets or beats its earnings per share estimates, it often leads to positive investor sentiment and potentially an increase in the stock price. Conversely, failing to meet expectations can lead to a decline in the stock price. EPS becomes the benchmark for these expectations, which is key for both investors and the companies themselves. EPS tells investors the sustainability of dividend payments. For investors who want income from their investments, EPS can affect a company's ability to pay dividends. An investor examining a company's EPS can assess whether the company is generating sufficient profits to sustain or even increase dividend payments. EPS as an indicator of risk. A company with fluctuating or declining earnings per share may be considered a riskier by investors. Decline in earnings may indicate financial instability, changes in market conditions, or poor management. Consequently, an understanding of a company's earnings per share is crucial in assessing the risks associated with an investment. Recognizing management performance. EPS can reflect the effectiveness of management in delivering shareholder value. Consistently growing or strong earnings per share often indicates competent management. Investors often analyze a company's ability to maintain and increase its earnings as a measure of how well management is managing the company. Let's now summarize the main takeaways from the video. EPS tells us how much earnings per share a company is able to generate. We observe this value in the context of companies operating in the same sector. We also look at the historical evolution of EPS to understand if this is a long-term trend or just a short-term fluctuation. Although earnings per share is a valuable indicator, it should be considered in a broader investment context. Other factors such as the financial health of the company, competitive advantages, industry trends, and macroeconomic factors should also be evaluated when making long-term investment decisions. Earnings per share alone do not provide a complete picture, but they tell us a lot about the company. I like EPS and I use it in my stock analysis to compare with other companies. Thank you so much for watching to the end. Have a good day, and before you buy a stock, look at its EPS ratio.